Get to know the FICO 10 changes in store for 2020. Business credit is independent of personal. Still, your personal credit matters. Experian Business and FICO SBSS both include it in their calculations, and many online and other lenders have certain minimal FICO score requirements. It pays in both your business and personal financial lives to keep your consumer scores high. Your FICO score is changing. A new suite of scoring models will be available from all three consumer CRAs, Experian, TransUnion, and Equifax, to lenders by the end of 2020. The new models will treat late payments and debt more severely, but they will also now consider historical information about your credit card balances and payment amounts. Your FICO score will likely change as a result, but it will still range from 300 to 850. Let's look at the FICO 10 suite. It includes the FICO 10 score and FICO 10 T-score. It's the first redevelopment of FICO credit scores since 2014 and the release of FICO Score 9. There are several meaningful differences with the new scoring system. Let's take a look at FICO Score 10 Suite considerations. 10 Suite will continue to consider the 5 main factors used in previous FICO models, which are payment history, amounts owed, age of credit history, credit mix, and new credit accounts. Let's consider trended data and FICO 10T. The goal is to give lenders a more precise estimate of credit risk. FICO 10T considers trended data, which is sometimes called time series data. This is data showing how a person has managed accounts over the previous 24 months. This creates a picture of their financial situation during that time. While trended data has been offered to lenders, it was only included as a metric in VantageScore 4.0 as of 2017. VantageScore 4.0 comes from VantageScore Solution. VantageScore Solution is an independently managed firm created by TransUnion, Equifax, and Experian. Let's look at what trended data includes. It includes balances, minimum payment requirements, and any amounts you paid on the most recent credit card statements going back 24 months. Here's how trended data works. This credit scoring model can differentiate consumers who pay credit card debt in full each month from those who carry over or revolve a balance from month to month. Consumers who pay their credit cards in full each month are generally considered lower credit risks than those who revolve a balance from month to month. Here are the advantages of trended data. Trended data allows a credit scoring model to determine if a person is reducing, maintaining, or increasing balances over time. These factors are considered by the newest scoring models. They help predict credit risk. This helps consumers and lenders make more responsible credit decisions. Here's how delinquencies are affected. Lenders generally report late payments to the credit bureau once they are at least 30 days past the due date. With the FICO Score 10 suite, the impact of late payments is more pronounced than with older FICO score versions. Consumers who miss payments are likely to experience a more severe drop in their credit scores under FICO 10 than under previous FICO scoring models. The best way to avoid the impact of late payments is to make all payments on time, with no exceptions. Setting up autopay to send just minimum payments ahead of the due date will help keep scores in decent shape. Here's how credit card debt is affected. An important metric that credit scoring systems consider is the amount of credit card balances versus limits. An important metric that credit scoring systems consider is the amount of credit card balances versus limits. This is called credit utilization. It is calculated by dividing credit card balances by credit limits. For example, $5,000 of credit card debt and a $10,000 of total available credit means utilization is 50%. The lower the percentage, the better for all credit scores. Credit utilization has long been a component of credit scoring models, but its impact will be more pronounced in FICO 10. Here's how personal loans may be affected. Debt consolidation can be a smart financial move. This is because interest rates on personal loans can be much lower than those on credit cards. It can also be a smart personal credit score improvement strategy. By converting revolving credit card debt to an installment loan, credit scores may go up. This is assuming it's easier to pay off an installment loan. Under FICO 10, consolidation could still be a good idea if trying to eliminate expensive credit card debt. But there's one exception. That's if you use newly paid off credit cards to make new purchases. That is, building up new balances while also paying off the consolidation loan. Here, a score will likely drop under FICO 10. This is how consumers with good credit reports are affected. If you already have a good credit score, then FICO 10 is good news for you. You're likely to score higher. If you've been paying your bills on time or early and in full, then you've already got a good payment history, and your trend will be a positive one. How can you raise a FICO 10 or 10T score? Develop and follow a habit of paying on time and as in full as possible, but even minimal payments will help you, so long as you're not incurring more debt. Keep your credit utilization down. This means waiting between large purchases if you can. It means paying down or off balances before making more large purchases. Keep track of your credit. You can get a free copy of your consumer credit report every year. Go to annualcreditreport.com to ask for a report from one of the CRAs. Address any errors as soon as you can. Improve your spending habits and your repayment habits. The new scoring system favors a positive trend. If you can show you're getting better at managing your money, then that will reflect in a better FICO 10T score. When will FICO scores change to the new system? FICO 10 and FICO 10T roll out during the summer of 2020. They will be a part of the consumer CRA's scoring, but lenders might adopt later, if at all. After all, many lenders still use FICO 8. How can you leverage the delay in adoption? You still have a few months, so get your financial house in order as much as you can. Therefore, if you've recently made a large purchase, put off other big purchases if you can, and you won't show trending large balances. How can you leverage the delay in adoption? Reduce your credit utilization if it's high. That usually means bringing it under 30%, and under 20% is better. Take the time and get a copy of your credit reports at the big CRAs and dispute any errors ASAP. Let's recap. FICO scores are changing. The new FICO 10T in particular will follow credit trends. This includes a look back 24 months, so if you have a good recent credit history, then your scores will likely go up, and if you don't, then the opposite will happen. The new system goes into effect during the summer of 2020.